The Week in Review, April 17th, 2015, brought to you by Precious Metals International. Volatility continued this week as rampant speculation over the timing of when the US Federal Reserve will raise interest rates triggered uncertainty and instability in the markets. Events in Europe and Asia this week also worked to depress stock markets. The weekly unemployment data in the US remains volatile. The number of Americans filing initial claims for state unemployment assistance jumped higher by another 12,000 claims last week, pushing jobless claims back to 294,000 for the week ending April 11th. Claims for the previous week were also revised higher by another 1,000 claims. We continue to expect volatility in the employment data for at least the next several weeks. US building permits posted their largest drop since last May, and housing starts rose much less than expected in March, sparking concerns that the US economy may still be stumbling over more than just another bad winter. If April's economic data comes in underwhelming in the US, that will likely reinforce the view that the US economy continues to struggle to gain sustainable growth, and that the Federal Reserve will therefore hold off on raising rates. Global stock markets dropped on Friday amid news of an outage among Bloomberg financial terminals and the possibility of a clampdown by Chinese regulators on over-the-counter margin trading in China. Mark Farber, well-known bearish investor and editor of the Gloom, Boom and Doom report, told CNBC on Friday that Greece is bankrupt and should default. Mr. Farber said, even if Greece grows at 10% per annum for the next 10 years, it will not be able to pay its debts back. It's bankrupt. We better face the reality and not kick the can down the road. Greece should default. Regarding the possibility of a Grexit where Greece would exit the Eurozone, Mr. Farber said, I personally think it's not so much of an economic issue as a political issue. Europe, and in particular NATO and the US, do not want Greece to leave because if they do, other people are going to knock on Greece's door, like the Russians or the Chinese maybe. It's very much a geopolitical game of chess that's being played. Mr. Farber continued saying, I think that the ECB and European banks will have to take huge losses on their loans to Greece and bond purchases they've made, if Greece defaults. I think Greece is in a very strong negotiating position. If they don't want to pay, the IMF and the ECB, what are you going to do, invade and hang them all up? In the United Kingdom, the number of unemployment dropped to its lowest since 2008. The British pound jumped against the dollar on the news that the jobless rate in the UK fell to 5.6%. The improving jobs market in the UK will likely aid the incumbent Conservatives and their coalition partners, the Liberal Democrats, in the upcoming general election in May. Prior to the release of the unemployment data, opinion polls have shown that the Conservatives are virtually tied with their opposition, the Labour Party. If neither party can gain an edge before the elections, the possibility of a hung parliament in the UK would dramatically increase. Elsewhere in the Eurozone, consumer prices rose for the second straight month in March, soothing fears that deflation might become entrenched across the area. Inflation remains negative at minus 0.1% for March, but if consumer prices continue to edge higher in coming months, inflation might finally move into positive territory across Europe. The figures will likely aid the European Central Bank, ECB, in justifying the continuation of its quantitative easing bond purchasing program. ECB President Mario Draghi said this week that he is committed to the bank's quantitative easing program. Crude oil prices pushed to new highs for the year this week as U.S. inventory data finally showed only a slight increase compared to previous weeks. Continued unrest in Yemen and the insistence of Iran that they would sign a nuclear deal with the West only if all sanctions were immediately lifted also aided in pushing prices higher. The euro moved essentially sideways against the US dollar at the start of the week, and then began moving higher in fits and starts for the rest of the week. There was a slight drop for the euro on Friday, but it appears that the embattled currency will still close the week higher against the dollar. The Japanese yen dipped briefly against the US dollar at the start of the week, but began moving higher almost immediately. The yen also saw a slight drop on Friday, but still appears set to close the week higher against the US dollar. Volatility should be expected to continue. Friday showed just how jittery stock markets continue to be, as threats by China to crack down on over-the-counter margin trading sent Asian, the US, European stock markets all plunging lower. A glitch that caused an outage in Bloomberg financial terminal systems also spooked stock traders on Friday, adding to the fears present in the market. In Europe, Greece continues to be the primary news subject as fears grow that the struggling country will be unable to pay back the debt it has amassed. Standard & Poor's downgraded the credit rating for Greece to CCC+, with a negative outlook on Wednesday of this week, citing lack of progress in negotiations with its international creditors. Moritz Kramer, the chief sovereign rating officer at S&P, told CNBC on Thursday, "There's very little progress, and this is all the more worrisome because Greece is running out of time. We cannot quite be sure how much liquidity there is left. We're definitely talking about a matter of weeks and not months, and the government is starting to scrape the barrel of sort of liquidity from state companies, pension funds, etc. So it's a race against the clock." On Thursday, Christine Lagarde, head of the International Monetary Fund, told reporters that the IMF would grant no payment delays to Greece when its payments come due next month. David Lipton, deputy managing director of the IMF, told CNBC, also on Thursday, "Our institution is a pool of money provided by our members. Our members expect borrowers to repay," reinforcing Ms. Lagarde's statement that there would be no extension for Greece to pay back the money it owes. Reuters reported on Friday that Greece will need to tap all the remaining cash reserves across its public sector, a total of €2 billion, to pay civil service wages and pensions at the end of the month, according to Finance Ministry officials. Barring a last-ditch deal with its creditors that is likely to leave no money to repay the International Monetary Fund, almost €1 billion due in the first half of May, although Greece has said it wants to honour its debt obligations. In an official statement released Friday, Greece's finance ministry said news agencies' reports that refer to the state's cash reserves are groundless. "We categorically deny them." The terse statement did nothing to alleviate concerns about Greece's cash flow problems. Greek officials are set to meet their lenders in Brussels this Saturday for additional negotiations ahead of a finance ministers' meeting on April 24th. If Greece and its creditors cannot come to an agreement on the reforms required to release the remaining additional funds from its previous bailout agreement, then the likelihood that the embattled country will be forced to default on its debt obligations increases significantly. The Financial Times reported this week, citing people briefed on the radical leftist government's thinking, that Greece is preparing to take the dramatic step of declaring a debt default unless it can reach a deal with its international creditors by the end of April. One anonymous government official said, "We've come to the end of the road. If the Europeans won't release bailout cash, there is no alternative to a default." A default in Greece likely would trigger the much-discussed Grexit, sending the entire Eurozone spiralling into unknown territory. Once again, we enter a weekend under conditions that could lead to extreme volatility next week. The outcome of this weekend's meeting between Greece and its international lenders could affect markets drastically as they open in Asia on Sunday night. Additional brinkmanship by the Greek government is likely to increase the odds of a Greek exit from the Eurozone in the coming months. Pay attention to international news over the weekend and watch for news headlines that could send precious metals shooting higher when the market opens in Asia on Sunday night. If metals begin moving rapidly higher, buying opportunities to acquire them at the current discounted price will likely evaporate quickly. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Week in Review, April 17, 2015, brought to you by Precious Metals International.